Bismillahirrahmanirrahim. Assalamu alaikum, students. In the last lecture, we have completed our chapter number 2, and I gave you some homework questions, self test questions from 1 to 15. Is there any problem in this question? You can ask. And now there is a homework from now to onward from question 16. So there is the today's homework from question number 16 to question number 20.
Okay.
So you have to solve these questions. Okay, so it will help you to understand the concepts very well. Now let's start to discuss our next chapter 1.3, next topic 1.3, accounting for non-current assets. What is the non-current asset? This is which we have already discussed in our accounting basic concepts lecture. So non-current assets are those assets which is in the ownership of a business, and that assets will give benefit to the organization more than 1 year. So any asset which give benefit to the organization, to the business, more than a year, so it will be treated as the non-current asset. So in this topic we will learn how to calculate, how to accounting for non-current assets. First of all, before accounting for the non-current asset, we have to know the difference between what is the capital expenditure and what is the revenue income expenditure. Capital and revenue income and expenditure. So we should know the difference between capital and revenue income, capital and revenue expenditure. So what is meant for this? A business purchases resources to be used in generation of profit. Some of the resources are used up in a year. Good purchases for resale with used as a 1 year. So these are not the non-current assets. So these are the capital and revenue expenditure. So in this topic we have to differentiate between what is the revenue expenditure and what is the capital expenditure. What is the revenue expenditure, what is the capital expenditure. So there is actually the 4 terms which are using alternatively. That is the revenue, income, revenue expenditure, and the capital income, capital income and capital expenditure. So these are basically the 4 terms. Actually the 2 that is the revenue and the capital, but in total we have 4 different concepts: revenue income, revenue expenditure, capital income and capital expenditure. First we have to know what is the meant for revenue, then we will know what is the capital. So revenue income are those income which we earn on daily basis. So every income will be categorized as a revenue income which business is earning for the sale of inventory, for the sale of goods. So every income which business is receiving against the sale of goods is considered to be revenue income, in simple words. So revenue income, business earned by selling the goods. Business earned it by selling the goods. By selling the goods. And what is the revenue expenditure? The revenue expenditure, any expenditure made for day-to-day expenses, or any expenditure which is incurred and for the sale of goods, and which is incurred for the purchases of goods. So the revenue expenditure actually the business day-to-day expenses. Business day-to-day expenditures for running its operation. So the revenue income will be the sale of goods, and the revenue expenditure will be the repair expense, admin expenses, etc. These are the expenses which business is incurring on daily basis. So what is the capital income and capital expenditure? So the capital expenditure are those expenditure which normally we incurred on the purchase of non-current assets. So here is the little discussion of capital expenditure. So good purchase for resale will be used in 1 year. Petrol purchase for delivery vehicle will be used in 1 year. The work provided by staff is used in 1 year. Of this is the wages which is earned by the labor. So all this expenditure incurred by the business, and all these expenditure fall under the duration of less than 1 year or in a 1 year. So every expenditure which business done to perform its daily business operation is called the revenue expenditure. And the capital expenditure is this: expenditure on non-current assets such as those items listed here is classified as capital expenditure. So what is the example of capital expenditure? Capital expenditure example: not mentioned here, so you have to say this, the purchase of non-current assets. So the capital expenditure is any expenditure which is incurred by the business to acquire fixed asset. So in short term, any expenditure made to acquire fixed asset, and we know that the fixed asset is the non-current assets. Non-current asset, or for example, business purchase plant, business purchase building. Purchase of building, plants, etc. or or any asset which meet the criteria of capitalization. Any assets which meet the criteria of capitalization are considered to be the capital expenditure. So the capital expenditure, the first example is purchase or acquire of building, plant, machinery, etc. And the second example is if we replace a engine of some particular machine and the efficiency of the machine will increase by changing the old part with new part. So this improvement also be treated as capital expenditure, because due to this replacement, the efficiency of plant will increase. So any improvement which increase the life, or you can say this, which increase the life or efficiency of an asset, also be treated as capital expenditure. For example, replace of old part with new part, replace old machine part with new part. So the cost of new part will be the capital expenditure as per the definition. So this is the capital expenditure. And what is the capital income? Capital income are those that are not generated for a particular period of time. This it will be one-off even. It will be the one-off income. So we can receive or earn this income occasionally, not randomly. So the capital receipt or capital income include income generated from sale of non-current asset. For example, we sold our building, we sold our machinery, we sold our plant. So the income which is generating from the sale of non-current asset will be treated as capital income. Income from share issue, income from loan taken by the business. So these are the categories of the capital revenue or capital receipts. So capital income, also called capital receipt. Capital receipt. Normally this receipt will happen on the sale of non-current asset. Sale of non-current asset, or you can say this fixed assets, or sale of share. Sale of shares. So these are the revenue, income and expenditure, and these are the income and capital expenditure and capital income. Any question? Any confusion in revenue, income and expenditure, capital income and expenditure? Okay, if you understand the concept of revenue, expenditure and capital expenditure, here is some activity you have to recognize. Either the following transaction relate to capital expenditure or revenue expenditure. So you have to recognize. The first one is vehicle A engine is repaired. So engine is repaired. Either it will be a revenue expenditure or capital expenditure. So tell me.
Revenue.
Well, so it's a revenue expenditure. It's a revenue expenditure. So we can write this RERE stand for revenue expenditure. Vehicle B engine is replaced. So engine is replaced, it means it increase the efficiency of engine B, vehicle B. So this will be the treated as capital expenditure. Point number 3, loan borrowed from bank for 5 years. It's mean there is a agreement more than 1 year. So more than 1 year contract will be the capital contract. So loan borrowed from bank, so it's mean we are receiving the income. So there will be the capital receipts. So here is capital CR mean capital receipt. Okay. Fourth one, interest paid on loan. The loan which we took from the bank for 5 years, and finally we paid interest on loan. So interest on loan will be the revenue expenditure or capital expenditure? Revenue expenditure. Well done. Cash received from customer. Cash received. So this is the income, either capital income or revenue income.
Revenue.
So this is the revenue receipt. So I have to write abbreviate. Here is the revenue receipt. Here is the revenue expenditure. Here is the capital receipt, and here is the capital C stand for capital expenditure. Okay. And the next one is point 6, cash paid to employee for their wages. So this is the revenue expenditure. Okay. Can you fill the remaining one? Can you fill up the remaining one? Okay. Let's solve now. Seventh one is wages paid by building contractor to his own staff for constructing of an office room. Read this line again and tell me either this expenditure will be the capital expenditure or revenue expenditure. So this expenditure, although it's written wages paid by building contractor, a building contractor paid wages to his worker to his own staff for construction of an office room. So we are constructing the office room. So office room will give us the benefit. So office room actually the non-current asset. So the office room will be our non-current asset. So any expenditure which is incurred for the non-current asset is called the capital expenditure. So it is the capital expenditure, not revenue expenditure. 8th one is the purchase of machinery for use in the business. So purchase is an expenditure. So what type of expenditure it is? Revenue expenditure or capital expenditure? Purchase of machine is a non-current asset, so it is the capital expenditure. Got it? 9th one, carriage paid to bring the above mentioned machinery to the factory. So the carriage inward, which is bringing machine to the factory. So it is the expenditure which bring asset to its original place. So these costs also be the part of the main non-current asset. So this cost carried inward also be capitalized, and this is the capital expenditure. 10th one is monthly electricity bill paid. So electricity bill is business operational expense, so this is the revenue expenditure. 11th, the purchase of soft drink vending machine for the canteen. For the canteen, we purchase soft drink vending machine. So that soft drink vending machine is a non-current asset. So any purchase of non-current asset will be the capital expenditure. 12. The stock of soft drink purchased for resale along with above mentioned vending machine. So along with vending machine we have to buy soft drink. So this soft drink is for not use person, not use purposes. We have to buy soft drink for resale purpose. So this is the revenue expenditure. So this is the daily business daily expenditure. Annual motor vehicle tax paid for existing car. So existing car mean these are the car which are using in the business operation or delivering goods to the customer. So the vehicle tax will be the operational cost of the business. So this is the revenue expenditure. Annual motor vehicle tax paid for new car. So this is again the car or a business which is used in business purposes. So every tax on business related expenditure will be the revenue expenditure. Cost of alteration in office van to increase carrying capacity. Maybe we have add on a new box in our existing van. That's why the carrying capacity of the machine increase. So this cost of alteration will be the on permanent basis and increase the carriage efficiency. So this type of expenditure will be treated as the capital expenditure, because this cost of alteration is not a business of daily routinal alteration. And the 16th one is small but expensive alteration to a manufacturing machine which increase the output of that machine by 15%. So this alteration increase the efficiency of a machine by 15%. So this expenditure will be treated as capital expenditure. Any problem, students, here at this level?
No, sir.
Okay. Next, move further. The effect of profit lost and asset value of the incorrect treatment of capital and revenue expenditure. Mistaken classification of expenditure, idle capital or revenue expenditure can occur, will potentially impact on the following. Profit calculation will be incorrect. The reported profit will be higher or lower than the correct value. If we failure to record, for example this one, like this one, erroneously we considered that this transaction will be based on the revenue expenditure. So for example this is the amount of 1000 and we considered that this is not the capital expenditure, this is the revenue expenditure. So by considering this statement as a revenue expenditure, our revenue expenditure will increase. Increase in expenditure means decrease in profit. So our actual profit will goes down by treating this capital expenditure to revenue expenditure. So this error will create directly impact on the profit and loss of the financial statement. So statement of comprehensive profit will increase or decrease with the change of these revenue and capital expenditure category. And if we consider this statement as a revenue expenditure, on one hand we increase the expenditure and decrease the profit. On the other hand, we understate our asset because we never add 1000 in the category of non-current assets. So our asset will decrease if we erroneously consider this statement as a revenue expenditure. So we have to cautiously select that the above statement either relate to capital expenditure or a revenue expenditure. Okay. So this is the examiner is saying. For example, If a purchase of motor vehicle to be used within the business is treated as revenue expenditure, then revenue expenditure will be higher than the correct level. This means reported profit will be lower than expected, which I told earlier. This one, the expected profit will be lower if we consider non-current asset as an expenditure. And the other hand, furthermore, the value of non-current asset will be lower on the statement of financial position. This mistaken classification of expenditure known as error of principle. So in the error of principle, we erroneously consider expense as a capital and capital as an expense. So here is the changing assets value. Here is the changing assets value. What does it mean? From now to backward, we considered that purchasing price will only be the cost of non-current asset. But in this class, I will tell you the purchase price will not be the only part of the cost of an asset. There will be a lot of expenditure. There will be a lot of cost which will be the part of non-current asset, and this expenditure mean we are capitalize this expenditure. Capitalization mean we consider this expenses be a part of a particular asset. So for example now we are going to determine the cost of non-current asset. Cost of non-current assets. Non-current assets actually mean your fixed assets. Non-current assets mean your fixed asset. So in cost of asset, we include the following factors, following items. Number one is purchase price of non-current asset. Purchase price of non-current asset. For example, we have to buy a machine for $100,000. So this $100,000 will be the purchase price of non-current assets. We also add up the delivery charges, that is the carriage inward. So we add up this amount in the cost of non-current asset. It's a lot of list. Then we will subtract the trade discount if supplier offered some trade discount. We subtract trade cash discounts. So trade or cash discount will be subtracted from the cost of non-current asset, less any subsidy or rebate by government. This amount will be subtracted. Add insurance in transit cost In simple word, insurance cost, you can say this, we add the insurance cost, and here is a lot of list non-refundable taxes, non-refundable taxes, insurance cost we have already taken. Then you can say this trial run test cost, for example, you can say this trial run test cost, either the machine is working or not, so we have to cost which we bear in the running of the machine, that will be also the part of the non-current asset. And we can add up this site preparation cost. If we have some special kind of type of machinery and we have to make some construction to make a site preparation for the particular plant, so the expenditure incurred for the preparation of site preparation cost for a particular non-current asset, site preparation cost also be the part of non-current asset. And trial run cost we have already included. Dismantling cost mean when we discard our asset from the business premises, the cost of dismantling also be the part of the cost of asset. And here is a lot of list, and we write the final statement. We can say this: any cost which directly attributable, so these are all the costs include any cost which directly attributable to bringing the asset assets to the location and necessary condition. So in short word, what is the cost of non-current asset? So the cost of non-current asset, in simple word, we can say this: from purchase of asset, all the costs will be the part of non-current asset from the purchase of asset till the asset available in our business premises. All the costs during this time frame will be the part of non-current asset. So the cost of non-current asset include all the costs from purchase price of non-current asset to the plant is running for the production and plant is available in the business premises. So all the costs will be the part of the non-current asset cost. So this is actually the cost of non-current assets. Changing asset value, we have already, I told you, any associated costs such as delivery, installation charges connected with getting asset ready for use, these all will be the part of cost of asset. Okay. So all non-current asset except land, all non-current asset have finite life. They have a finite life. According to UK Companies Act 1985 says that all assets with a finite life should be depreciated. Every asset which has finite life should be depreciated. Depreciate means with the consumption of asset, with the usage of asset, the value of the life of asset will deteriorate. The life of asset will depreciate. So a machine will eventually cease to produce the good for which it was purchased. A delivery vehicle will eventually cease to be useful for the delivery of goods when its life is fully usable, fully completed. Of course, land should not be depreciated because land has infinite lives. Because we don't know the life of a land, so we can't depreciate land in this level. In advanced accounting, we will learn that some land is depreciated, is depreciable asset. So in this level, our level, so we will never depreciate land because the life of land is infinite. When a non-current asset is purchased and later sold, the amount that is not recovered is called depreciation, which we will discuss later about this one. So this is the some information related to non depreciation. In depreciation we will discuss in our next lecture. So this lecture will be based upon two things. Number one is what is revenue and capital, and what is the revenue receipts and revenue expenditure, and what is capital receipts and capital expenditure. So this class is purely related to revenue and capital. Any question related to this one you can ask. And the last we read this, what is the cost of non-current asset. So in this lecture we learned that only purchase price will not be the cost of non-current asset. There will be a lot of cost which bring asset to its operational form. That cost will also be the part of the cost of non-current asset. So we can say this cost of non-current asset will be the broader term rather than purchase price. So purchase price is the one price, and all costs associated with this purchase price also be the part of cost of non-current asset. G students, yes student, any question at this point?
No, sir.